Welcome back to Not Financial Advice. Today we're going to be taking a look at Paramount stock right after this.
You need to diversify your bonds.
The only problem you're going to have is that you didn't buy more. Because by the time you read about it in the Wall Street Journal, it's already too late.
Company that owns the properties MTV, BET, um, Comedy Central. So a lot of great intellectual property on this company here. It's also a company that Warren Buffett owns. He owns it in the last year across multiple quarters. He's added to this position. And so I own a little bit of this, but if you've been taking note of this stock recently, I thought this would be a good time for us to look at the stock together and see if we can get an idea of what this stock is worth on a per share basis. So I'll ask you to like the video and subscribe to the channel, and we can get right into it. So looking at the price performance of Paramount stock, it looks like it's been public for about as long as I've been alive and has given very poor returns, just a couple of percent year on year over the last 35 years, something like that. Does not look great from this chart perspective. Frankly, it looks like the chart of a company that's dying. And so I will admit I bought this stock because Warren Buffett bought it or one of his lieutenants. I suppose we don't know exactly who bought it. Um, but I do believe that Warren Buffett knows everything that Berkshire owns, and that he's educated his acolytes, his lieutenants, to buy the right type of stocks. And so this I would, look at somewhat differently than where a lot of you know, pretty good finance YouTubers. They followed Charlie Munger into Alibaba, which in the intermediate term here seemed to have been a mistake. A lot of people have capitulated on that. And so I will admit that I bought this stock for three reasons. So it's because I grew up on and loved the properties of Comedy Central, MTV, BET, great properties. Additionally, Buffett did buy the stock, which, you know, made me attracted to it. It's how I learned of the stock in the first place. But lastly, what I was able to see is that it's well off of its all-time highs. So looking at a relative valuation, it did seem cheap. Now, I guess let's just get rid of all this. We can sort of see the trend line. It's really unclear whether this stock is fairly valued, overvalued, or undervalued, just with this really bizarre looking stock price chart. So let's get rid of this trend line here and see what we can learn together. So um, this is a new thing that Google's doing. I find it to be pretty instructive, actually. So back in uh, early 2020, the stock went down 18%. Viacom CBS profits and revenue disappoints. And we saw this huge spike here. Um, this probably was Yellowstone. It was probably Yellowstone and some um, positive news about Paramount Plus, which is a streaming service owned by Paramount. Um, but we're just showing here, this thing ran up to this crazy level, and we'll use this $97. The stock is down 83% from all-time highs. And as it's declined from that $93 level, it's been on a downward slope. And so we have a max drawdown of 83%. But just going back here, we can see shares tumble further on pricing of 3 billion stock sale. Okay, so they sold stock to support their streaming arm Paramount Plus. I actually like that. So part of the thesis for continuing to hold this is this is a legacy media company. They have access and rights to broadcast NFL games. I think they even own like Simon and Schuster, a publishing company. This is, and of course, this used to be called Viacom. It used to be CBS. They merged and then they um, changed their name. And this is the company that remains is Paramount. So anything to do with the Viacom or CBS or Paramount, it's now Para stock. And with Netflix, which I also own, I own about 4 or 5 times more Netflix than I do Paramount. Um, but I think the thing that really pushed me over the edge to buy this stock was that Yellowstone was so well done, made me emotional. And, how do you value entertainment that strikes someone on such a personal, deep level? I think that's a pretty strong, um, I think that's a pretty strong piece of value, and it can be kind of hard to put your finger on the value, frankly. Um, so just continuing to look at this, Paramount stock slides on step down streaming plans. Analysts downgraded them down another 18%. Paramount Global shares sink as a result of miss on revenue, particularly TV revenue, down 12% that day. And then more recently, Paramount stock jumps after streaming losses shrink, which is something that we saw with Netflix. For the longest time, they had to invest and invest and invest and invest. And finally, they started producing, free cash flow. And so I believe that Paramount will transition to being one of the key players in streaming because of their intellectual property. And that's why ultimately I own the stock. That sharp peak there, I don't think is super duper helpful. But a more realistic look at this, the stock is down about 76% from its more realistic all-time highs. So a 76% drawdown. Let's keep it pushing here and see if we can figure out what this company's worth. I'll ask you to like the video and subscribe to the channel if you haven't already. And we're just going to lightning fast blitz through a couple of these headlines. So, I talked about the intangible aspect of when you entertain humans and evoke these powerful emotions of attachment or joy or fear or anticipation in entertainment. um, I think that's just really valuable when you strip everything else away. And so Apple's talking with Paramount about bundling their streaming services. That definitely, I think, would help Apple as it competes against Netflix. That's a no-brainer to have access to, sports, more sports, and Nickelodeon and MTV and BET on iPhones and on Apple products. That's a no-brainer. So I think the fact that you have one of the best companies in the world, in talks with what, for all intents and purposes, looks like a value trap, I think that is interesting. Another thing I just realized, biggest holder of both Apple and Paramount is probably Warren Buffett. So there might be some sort of connection here. Huh. We'll have to see. So this was from about a week ago, but there's also talks about a takeover by a private finance company. And so usually when something like that happens, you'll need to pay a pretty high premium on shares. And so, um, when you have mergers, arbitrage plays, oftentimes the company or the organization that acquires will need to say, okay, we'll pay you, 25% or 35% over where your shares are trading on a current day. So that could be sort of an exit into this company. In the long term, I hope that it remains public, but if that were to happen, I don't think that would necessarily hurt me by any means. But let's take a look over here on Qualtrim. This is a suite of software that I pay for, but not one I'm affiliated with. So I'll leave a link for Qualtrim in the description below. And like I said, this is a suite of software that I use to look at stocks, and it's really, really super duper helpful. So we're about to start breaking down this company's financials here. Before we dive into that, I will ask you to like the video and subscribe to the channel. And let's take a closer look and see what we can see. So the company Paramount has a $10 billion market cap. And so it is a large cap company. Its price, being down 76% from its most recent sustained high. It is teetering on on the edge of no longer being a large cap stock, of becoming a mid cap stock. So it's really taken a beating, and there's a forward PE assigned to it of 12.1%, which is cheap. Now, this is something I kind of have the sense this might be a Warren Buffett, Ben Graham nostalgic type play here. So price to sales, right? So 0.36 price to sales is what this company is trading for. So let's look at the revenue over the last full year that reported. So 30 billion in revenue, trading for $10 billion market cap. So they're trading for 40% of what their revenue is. It catches one's eye. But there it's not pretty. It's not all pretty here. So what we can see is that they have $1.8 billion in debt approximately, and nearly 16 $1 billion in debt. That first number, 1.8 rather, was their cash and cash equivalents. So huge amount of leverage and debt on this company, which is certainly not great. Uh, if you're tuning into this, the Federal Reserve made some announcements, some proclamations the other day, and a lot of weird, smaller and value type stocks are storing. I think Paramount's up probably about 10+% in the last 2 days. And so that's cool. But another thing that we have to understand is that Paramount recently cut its very large dividend, not by a little, by a lot, and they're still sort of leveraged on that. So 16 $16.40 stock. Let's see what sort of value we can put on this company. So their revenue is essentially flat for the last 20 years. That's never great. Um, but we can see here a lot of this is probably going to be from streaming. And so over the last 10 years, our revenue has grown at 7.91%. Um, but this is not the best looking revenue chart I've ever seen. Although, based on what I am interested in, which is their streaming services, that has caused some good performance recently, from 28 billion to 30 billion in 4 years. So that's pretty cool. So we're going to give their revenue a check mark, a tepid little check mark here. And they're up 7.9% in the last 10 years. We're going to be using this number when we try and figure out a value for this stock. So moving right along, let's take a look at free cash flow. And so this would be a X mark. Not great. It's going down. It's even become negative. It hasn't been negative for over 20 years, and it's negative again. So this is an X mark. Um, TV, legacy cable TV, it's dying. This future is streaming. And so, we're going to see if Paramount can pull it out. But this is going to be an X mark on free cash flow. And that's the most important thing for me in any of my investments. Yet I own this company, and it's kind of causing some cognitive dissonance. But we'll talk about it some more as we progress through this video. So looking at earnings per share, yeah, I'm underwhelmed. Uh, Fine, it's a check mark. They've got some earnings per share. Doesn't look great, but that is a way that Wall Street often will value stocks. So EPS was a check mark. Dividends is going to be an X mark. They've cut their dividend multiple times. If a company cuts their dividend once, they're likely to cut it again. And so this company cannot be trusted or relied on to provide you dividend income. We're going to take a look at some more metrics that matter here. Let's take a look at their expenses. It's going up and to the right. That's bad. Although in a lower interest rate environment, it's less harmful. But this is going to be an X on expenses. Let's take a look at valuation. So let's look over the last 10 years. It's trading at a very low relative PE to its historical average of probably about 17 or 18 is probably their average PE. They're trading around a 10 or 12 PE. So this is going to be a big check mark on relative PE valuation. Ratios, they're losing money, or they're having a hard time reinvesting successfully. It's going down. I think they're really putting that emphasis on streaming. So this will be sort of like a neutral. Um, you know, as it stands, it has to be an X mark. Not looking great. It's under 10% and it's declining. So that's going to be an X mark on their profitability metrics. And then shares outstanding, they've issued shares. So that's another X mark. So not the strongest fundamentals here. I'm going to ask you to like the video and subscribe to the channel, and we're going to keep going here. Let's look at some other things that matter when it comes to Paramount stock. So Mattel and Paramount working on an American Girl movie. If you remember how successful that Barbie movie was, that could be a good thing. Um, some other headlines. Media Harris, Sherry Redstone in talks to sell Paramount Parent to Skydance, which is a private equity firm. And then Paramount needs a buyer or at risk financial distress in 2024, says Needham's Laura Martin. So that's kind of where we stand. Looking at insider buying, all that's happening is people selling shares around its current. People sold shares around $15 just a couple of months ago. So in the immediate short term, that looks to have been a mistake. Somewhat. So I think that's everything over here. So I wanted to get back to what I was mentioning to you earlier. What's the value of a company like this? A lot of this intellectual property is hard to measure. Um, it seems intangible. If they were to become 100% a streaming company and become a lot more efficient, I think there's huge amounts of free cash flow possible because of their IP. And at the same time, I'll admit that this stock is pretty complicated, mixing legacy TV with streaming and a lot of reinvestment. Um, it's a little bit of a head scratcher for me, and so this is what brought it to my attention in the beginning. But what we can see here is going back to, let's see when Buffett first bought this, or when Berkshire first bought this, rather. So it looks like in Q1 of 2022. So in late 2021, Warren Buffett started buying shares. So he bought shares in Q1 of 22. Buffett added 14% in Q2 of 22. He added 16% in Q3 of 2022. He added 3% in Q4 of 2022. He added a marginal amount in Q1 of 23, and now he's holding. And so we're going to go over here. We'll just take a look at, what my relationship with this company is. So I own 18 piddly shares of Paramount. I'm down 18%, which is $70. No big deal. It's only $300 of my much larger portfolio. So it's not even a percentage of my portfolio, because I can't really value this company. That's a spoiler alert for you. But, I think that I'm going to.
This question comes from Barry Laffer in New York City. Berkshire owns about 94 million shares of Paramount Global as of the last published data. This asset-rich company has disappointed on recent quarterly earnings reports and just this week slashed its dividend by 80%. How do you see the streaming wars evolving, and do you still have conviction in your investment thesis? Is your investment thesis based on the company being an acquisition target or based on its fundamentals?
Yeah, and how would you like to manage my money for nothing? We are not in the business of giving stock advice to people, and people who don't know anything about stocks can make a lot of money doing that. And we don't think it's something we should give away. But I will say this: it's not good news when any company passes its dividend or cuts its dividend dramatically. And the streaming business is extremely interesting to watch because there's people love to use their eyeballs watching, being entertained on a screen in front of them or a phone or whatever it may be. But there's a lot of companies doing it, and you need fewer companies or you need higher prices. Well, you need higher prices or it doesn't work. And you don't lock in people when you get them to join up for the streaming period when your serial runs. I mean, you keep them on for a while, but you can't lock them up. And and we'll see what happens.
Show. The movies are tough. Try to invest in a New York show on a conventional stage. There, they think it's a breach of faith in that business to let the person who put up the money ever get any money back.
Yeah, yeah. Well, Charlie saw a lot of that actually. When
Yeah, I don't like those businesses.
tell him what happened on Cleopatra, Charlie. it's no, it's a business that everybody's tempted to go. They love the idea of going in it, and they get a certain amount of psychic income. But
I never owned any racehorses either.
well, my father-in-law and I used to talk about claiming a horse at Exarban, but we never quite got around to it. And we had a lot of fun going to the track together.
So there's that. We heard from those two goats, a little bit about this. And so some of the things that were discussed were that, that you need to have pricing power, which comes from having a moat in case of Paramount. I think it's intellectual property. Um, Buffett said it's horrible when a company cuts its dividend, but we'll see. So it sounds like he's holding it. He doesn't want to give financial advice, a kindred spirit. But I think that there is value in this intellectual property, and I think that Paramount has some of the best intellectual property out there, um, under Netflix at this point, but a lot higher than some of its other competitors. So let's keep on pushing here and see what else we can find. We're going to look just at their most recent investor presentation together. There's a couple, they always are going to show you the most rosy side of what it is that they're doing. Um, but of course, they have Paramount Plus. They also have Pluto TV, which is like a free streaming thing. Um, let's just see. Let's just see what is important that we need to look at. So this is honestly, it's just a lot of it's a lot of fluff. So when we talk about their Paramount Plus paid streaming service, I think this is where a lot of the value is. Probably shouldn't compare this to Amazon, but in the past, Amazon lost money on retail, but they made money on AWS, and so I think it'd be most attractive to just look at the percentage of revenue and profit that's coming from Paramount when it comes to the streaming side, or if you could strip everything out, this is where the excitement is. And so in 1 year, they went up 17 million subscribers. That's pretty cool. Revenue also went up 62% on Paramount Plus in the most recent year. So that's pretty huge. Just looking at some other things. So they're the low cost provider. So they have room to grow their subscription price. Netflix and HBO Max are sort of the highest price providers. Netflix here, Paramount here, but I think Paramount has much better content than Peacock or Hulu. Yet they're a lower price service. So I think as Buffett mentioned, I think there's room to grow those fees there. And okay, boring. We're done with that. So, the expectations for this company are incredibly low. And just in the time that I've recorded this video, it's gone up another couple percent. So now it's a $16.50 stock, as it were. But we had that recent pop, you can see here, they've not been expected to turn profit. And so they were expected to lose 2 cents 2 quarters ago. They made 10 cents, which was a EPS beat of 670%. And then in its most recent quarter, revenue has been pretty much in line, a little bit above for the last 2 quarters. But again, such low expectations on this company that when they previously were expected to lose 2 cents and they made 10, they had a 670% beat. So then the street said, well, can you make 10 cents again? And they're like, yeah, sure, we can make 30. So it was 191% beat. And so in the last 2 months, they've surprised to the upside on revenue and earnings, top and bottom line, in about the last 6 months. Thanks for sticking with me up to this point. If you're still here, I'll ask you to like the video and subscribe to the channel. We're coming to the end of it, but I had a lot of thoughts I wanted to share. So thanks for bearing with me here. Had to do some extra editing in between to be able to add this last segment here, but the stock is up, a couple percentage on the day from even when I started recording this video. But we've seen the stock in the last 2 quarters beaten on earnings to the upside here. So now we've got a bullish technical thing. Paramount shares cross the 200-day moving average, and it jumped 12% in that day. So just looking at the last month, we're up 33% on this stock. And I shared earlier that I don't really know how to value this. I mean, we saw all the stuff that was over here on Qualtrum, and I'll bring you inside of what I was able to surmise on, trying some different valuations. But a company of this maturity, should be paying a much larger dividend if it had been managed more responsibly. So trying to value this company based on its dividend, it showed a negative value. Trying to base this company based on its earnings per shares, based on earnings per share. Um, you know, they've had some investment cycles and some losses and this and that. And so, just based on that, historically pretty low earnings per share multiple, I couldn't really get much out of an EPS valuation. So the tools that I have access to are pretty rough. Obviously we'd love to value this based on free cash flow. But they've just turned negative for the first time in 30 years and been on a downward slope before that. So, based on this valuation, on a free cash flow valuation, you've got a $17 stock. This is all the data I brought in from Qualtrum, an average of the last 5 years of free cash flow. Cash on hand is of the most recent reporting. Debt, shares outstanding. I think the company in the last 10 years has grown about 7.9%, but a lot of that has been more recent. And so I just put in, conservative growth estimates of 5%, years 1 through 5, 4%, 6 through 10, terminal growth rate of 3%. The discount rate of 10% on this stock is, I've got a $17 stock here, but because of this very, very high level of debt and relatively, lower growth rate, with the tools I have access to, the stock is worth nothing, uh, less than nothing. But it's not really possible. So this is sort of a limitation of my skill and my ability just to shoot completely straight with you. When you have a company that produces free cash flow, any amount of free cash flow. When you have a company that's producing any amount of free cash flow, this is not like options on oil during COVID. This isn't like, leveraged, you know, gambling like put or call options. You can't go below zero. And so, when we have a company with growing revenue and with free cash flow at times, the value of it can't be zero. But I also am not exactly able to value this company appropriately. The legacy business is probably hemorrhaging money, and the streaming side is probably yet to be profitable yet. We're seeing revenue go up, and so it's just kind of a hard one to put your finger on the pulse of. But based on the totality, this goes against a lot of my instincts as a value investor. So it's less than 1% of my holdings, and I shouldn't do that, but I can do whatever I want. And that's it. So thanks for tuning in. Like the video on your way out, subscribe to the channel, and I will see you on the next one.